Good afternoon, folks. Welcome back. I'm going to talk about the ICT sick sister concept. So if you were confused by today on Twitter, I'm hopefully going to be able to wipe away some of, if not all, the confusion pertaining to my sick sister concept. I'm going to show you why I chose to use the NASDAQ today, and I'll start off by saying that the economic calendar this week is heavy-handed on the Wednesday, Thursday, and Friday. So Monday and Tuesday is lacking any real meaningful medium or high-impact news drivers. So it's expected to have these consolidation days, which is what we're seeing here. Because it's going to be a consolidation market, and how did I know it's going to be a consolidation market? On Twitter, I mentioned that we had an old new week opening gap in close proximity to our current new week opening gap. I'm going to save that time and energy in showing you that here on the chart. You can find that on my tweets. So NASDAQ, let's take a look at the business here. This is the Dow in relationship to the NASDAQ. Notice that this market here on the Dow was able to make a higher high, whereas the NASDAQ was unwilling to make that higher high. Now I teach that as SMT. Sick sister is similar but not the same as SMT. There are conditions with a trending market where the sick sister opportunity will see a move that hasn't transpired yet on one asset or correlated market, meeting or exceeding an old high or an old low. And I'll explain what I mean by that. Because this high here was taken out by this high on Dow, it would be reasonable to expect in a symmetrical market that the NASDAQ itself would go up there and hit that too. But look closer. What do you see? There's a failure here. So this high is higher than this one, whereas this high is higher. We have a very specific time of day, and we're also looking at this divergence, and we're going to take a look at the ES. The ES was able to make a higher high here as well, but it didn't make that higher high there. Notice that? So if I take this idea and show you on the Dow, we penetrated this high here. Let's add some lipstick to it. So you have the high broken here at 8 a.m. Higher high. Both this high and this high was exceeded with the Dow. On the ES, we made a higher high here, but we did not make the higher high here at 8 o'clock. So this high was lower than this one. If we look at the NASDAQ, we had that lower high across both. This high didn't get penetrated, this high didn't get penetrated, and we're diverging. But now here's where the sick sister approach occurs and how to use it within a consolidating market. If this one's weak, we're going to wait for this one to drop down into a deep discount. That being this low to this high. Let's run a fib on it. So from this low up to this high, here is your optimal trade entry levels here, and here's equilibrium. So it trades down below it here and then goes into the order block, which is these consecutive down close candles, the black ones, and then we have a fair value gap here. So there's your discount. If you look at this high here and this high here, that's buy side resting here, and I don't need it to go all the way up to here to find a profitable trade. So I can be buying in this fair value gap inside of the order block, below equilibrium, inside of optimal trade entry, these two respective levels here, 62 and 79% on the fib. So I'm going to look to buy in a discount, and you can see that is the case here, right there. and I'll hover over top of it, you can see. Okay, I accumulated the position inside the order block, inside the fair value gap, inside of the deep discount, aiming for the buy side above this high here, and the buy side above here, and I'll put one right between the two of them. Here, here, and there. Okay, so that price run here, I did not need it to go up to here, even though it was likely to do so. I got out above here because I knew that once it takes out this buy side, it could want to rejoin what has been seen in the ES and the Dow. Now let's go back to those. At these highs here, at this specific high, look how much more it dropped off on ES and the Dow. So yes, they all three dropped. NASDAQ did not have the ability to get back above this old high, whereas the ES was, the Dow was. The Dow was also able to get above its high here at 230. The previous trading session, ES was not willing to do so. But so one of two highs were taken out on ES. Two of both highs were taken out on the Dow. Neither high was taken out on NASDAQ. That's the sixth sister, and we're in consolidation. So that means it's likely to drop down to a discount and then rally to go back above the buy side, whereas Dow was able to do so. I don't need ES to do so, and it's already went lower anyway. So using the sixth sister in a consolidation market means we're looking for the one that failed to make a higher high or lower low, which is like typical SMT. But the sixth sister approach or concept that I'm using is that it's going to try to do it later on. And you want to put your focus on the weakest one because, well, the Bible says so. First one now shall later be last. First one now shall later be last. This one couldn't even muster up enough momentum to climb higher. Whereas the ES did get a little bit higher, but the NASDAQ ramped all the way back up into the buy side here.
Okay, so I have a crude diagram up here, and this is going to more or less help me illustrate what it is that makes an SMT divergence. And for the sake of this specific bullish scenario, we're going to refer to the blue line up here. Okay, that's going to represent the Aussie dollar. And the red line is going to represent the dollar index. Okay, so in a symmetrical market where everything is as it should be, when the market creates a lower low, for instance, in the Aussie dollar, the dollar index should make a comparable higher high. So while the foreign currency makes a lower low, it should be reasonably expected to see the dollar index make a higher high. This is referred to as a symmetrical market. Sometimes you will see the market create this. The market will fail to make a higher high at the time when the foreign currency makes a lower low. So if the dollar index fails to make a higher high at the same time that the Aussie dollar makes a lower low, this is a crack in correlation. So that means there's something going on underlying behind the price action that's showing heavy distribution in the dollar index because it's failing to make a higher high when it should reasonably do so if this is a lower low in Aussie. Conversely, another scenario might be this, and it would mean the same thing. Okay, so what I'm giving you two examples here that would give you the same analysis, that being there's a crack in correlation. Okay, so now we have the dollar index making a higher high, but now in this case, if this was representing the Aussie dollar is failing to make a lower low. So this is suggesting that Aussie dollar is being bought up because it's failing to make a lower low. Otherwise, it should have made a lower low as the dollar index made a higher high. So when we're looking at SMT, what we're doing is we're looking at exactly the same time frame at exactly the same reference points or candles. Either one of these scenarios means the same thing. What we just shown was earlier, the dollar index was failing to make a higher high while the Aussie dollar made a lower low. That is weakness on the part of the dollar, so that would be bullish for Aussie dollar. Here we see the dollar index making a higher high and the Aussie dollar failing to make a lower low. That still is bullish for Aussie dollar. Okay, it takes just this relationship to be present in price action for you to see when there will be most likely a turning point, or in this case, accumulation in Aussie dollar. Okay, so what we have a graphic depiction of real accumulation in the Aussie, and okay, we can see the higher high in the dollar index. We should see a lower low in the Aussie dollar. We don't see that. So that means we have accumulation in Aussie dollar, distribution in the dollar index. Not surprisingly, this is exactly the same time when we saw the dollar index trade up into its daily resistance point. Okay, that old high. Look at this level here and this level here. This is distribution because we do not see the Aussie dollar making a lower low. So everything works like a teeter-totter, okay? If one side goes down, the other side goes up. If one side goes up, the other side goes down. If we put the dollar index on one side of the teeter-totter and the Aussie dollar on the opposite end, what's being suggested here is there's more buying in the Aussie than there is buying on the dollar index. Even though the dollar index made a higher high here, it looks like on outward face value only, it looks like it's broke out and it's bullish. But if we start bringing in other correlated assets like inverse relationship between Aussie dollar and the dollar index, we can see that there's actually massive accumulation coming in at that very moment. And we've already seen early signs of it back here because the Aussie dollar was making no attempt to make a lower low when the dollar index was making a higher high. Okay. Then we had a really nice intermediate term high relative to the hourly chart and failure to go lower again on Aussie. So now we can look for optimal trade entry longs. At the same time that the market was getting ready to sell off with an optimal trade entry sell here. So I'll give you an example of what that looks like. Again, sticking to the bodies of the candles, the bulk of the volume. Right there's the lowest body. Boom, 70.5 level, and then down she goes. Here, similar idea, just in reverse. Okay, we have the lowest body here. Drag it up to the highest body. Perfect, 79%. And I'll zoom in on that, you guys can see it. Perfect delivery. Make sure I got it right on here because I don't want to cheat. Right there. Right on top of this body. Delivery of 79% on the fib. 300 extension, nails it beautifully. SMT divergence gives us an X-ray view of what accumulation and distribution may be taking place in price action. It admittedly is a little confusing if you have not seen it before or studied it, because it's one of those things that you have to study it for a while to get a couple examples of its use. But this would be a bullish example of it with distribution in the dollar and accumulation in the Aussie dollar.